Hello and welcome to Target Business English Classes. My name is Jalil Balolia and I will be your teacher today. In the previous classes, we were talking about the need to report the financial results of a company in English. We started working on the necessary vocabulary to understand or produce such report. We mentioned that there are three key sets of figures in the report. We have the profit and loss account, the balance sheet, and also the cash flow statement. In part 1, we focus on the profit and loss account, or the income statement as it is called in the United States. And in part 2, we focus on the balance sheet. Today's class, we are going to focus on the cash flow statement. So when we look at cash inflows and outflows, the cash flow statement shows money which actually comes into the business and goes out of a company in a particular period. So we call these the cash inflows, the money coming in, and the outflows, the money going out of the company. So let's try and understand these terms a little bit better. We can have the cash flow from operating activities. So this is an accounting item that indicates the money a company brings in from ongoing regular business activities, such as manufacturing and selling goods or providing a service. Cash flow from investing activities is something which businesses do practice. This is an item on the cash flow statement that reports the aggregate change in a company's cash position resulting from gains or losses from the investments the company makes in the financial markets and also its operating subsidiaries, the companies which it owns. These changes result from amounts spent on investments in capital assets such as plant and equipment which the company has invested in. The net cash flow from investment activities is the result of the purchases of securities, which means financial assets, bonds, shares, which are recorded on this cash flow statement, and also money received from the sales of these financial securities to other companies. Okay. Loans can also be recorded, so loans made to borrowers, and loans repaid and loan interest paid by the borrowers, maybe to us or from our company to a bank, for example. The purchase of land, buildings and equipment are also on this statement, along with sales of land, buildings and equipment. Cash flow from financing activities is an item on the cash flow statement that accounts for external activities that allow a firm to raise capital and repay investors, such as issuing cash dividends, remember shares, adding or changing loans, or issuing more stock, so producing more stock of the company to be sold, maybe on the stock exchange. Cash flow from financing activity shows investors the company's financial strength. A company that frequently turns to new debt or equity for cash, for example, could have problems if the capital markets become less liquid. So remember, financial crashes, this is what causes companies to have problems. Okay. Net cash flow from financing activities is the result of money received through short-term borrowing, money repaid in short-term borrowing, money received through issuing new shares in the company, and money received through issuing new bonds in the company, along with dividends paid to shareholders. Adding and subtracting the figures above, the company calculates its net cash position at the end of this period. Investors check the cash flow statement to see how the company is obtaining and using its cash and how much it made through its operations, how much it raised through new share issues, and the following. This is the end of our class today, okay, about measuring results. We hope these lessons have made it much easier to understand the report and financial results in English. Stay tuned for our new classes and I hope you enjoyed it very much. Thank you.